Guys, today I'm gonna be doing basically, I'm thinking, well, I'm still in development of a new way to look at stocks and by trading with the market. So what I'm gonna explain to you is, so I call this the tower method, and it's where you enter a price. That's where you enter a price at market value, and then you use this over here as a ladder or a building. And if you guys have ever seen like it dropped a bowling ball through several story building, it slows down as it hits each level. So that's what I'm basically going to show you. So this is DWT. I'm just using it since this is a Monday and it's President's Day. UWT. So UWT is just about to go up. So what I'm going to do is I'm going to put an order in for one. I'm going to buy the market so then I can see what my P&L is. And then what I'm going to do is get 100 and I'm going to start selecting it. And I'm going to, see, that's where I bought it, right here. So I'm going to put 100, hold on, 200, 300, hold on, I just need to reset for a second. I just need to reset. Alright, so, I get in the market, one share, and then a few shares down, I continue it with 100. So right here, I'll go 1, 200, 300, 400. And if that share price goes down, my average price per share will go down, which means I will stay at a lower risk. So I only made 1 cent so far. But if I go, listen, I know it'll go up right here, but if it went down, it would slow the fall of it, so it would average it out. So I'd lose like $70 here, and then once it bought this, and all of that, it would automatically just be amazing because it'll average it out to be around 82 cents. So that means I would only lose about 7 cents, if that makes sense. So this stock is going up, and I made 9 cents off of it, but let's just go to DWT, which is the inverse of UWT, and I know it's going to continue to go down, so I'm going to set 1, 2, 3, 1, 2, wait, crap, I got 4 there. And delete that first one. Delete that one. Alright, 1, 2, 3, 4. So there's 100, 200, 300, and 400. So as that drops down, which it will, it'll lower the average of it. So I'll just put a 1 to show you what I'm talking about. Alright, so 1 cent. That's not that much. Skip this for a minute. Speed some things up. Alright, so now it's getting down here. Shoot, I did it too low. Let's just go 1, 2, 3. You can see how it lowered it down. So I went from, okay, let's just go by percentages here. It was down 4%, and you saw how my average was up here. And then once it started to buy it, so once the share price goes down here, it'll catch itself and it'll move the average down 2 cents. So that means I wouldn't lose, well, $7 as it says right here. I would only lose $1, and that's better than 7. So then you can cut out at any time, but then to sell, you kind of have to do 300, and then you have to put a 1, because if you day trade, each sell is going to cost you 1 day trade, and that really sucks. But the reverse order thing is this. So if you see the middle VWAP, which is doing right here, I would set a sell order for once it crosses this. That's what all these green lines are for. They're resistances. Now, if I put a sell order at each one of them, that is, so let's just say I have a few of those shares. It can go right here. So that'll be 185 is our top. So 1, 2. So that's 300. So you can see as it moving up, as it's moving up, it'll take the average and make it higher. And that's what the reverse order of one of these does. And it is pretty nice. Because it's 187. If I put 1 there. See, I've already made $20 off of 300 shares. It's like less than $2,000, and that's really insane. But you can see it makes the average lower, so you can make more profit using the ladder strategy when you're selling. So right now, I'd place one right here since it's looking like a lot of volume is trying to sell. So if I just go, it's a reverse ladder, so the lowest is still on top. So 1.7, 1 there, and 1 there. But if I had more shares, I would have done it. But since it's about to close out right here, because you can see this, how it's moving, so the buyers are currently winning, so it should be pushed back up, but I cannot confirm that. So I'm just going to set my sell orders here, and I'm going to set, let's do 1 share, 1 share, sell 1 share. So you would only do this if you have $25,000 or more, because each sell would cost you a day trade, and this would max out my day trades really fast. So you'd only have to do it on the upward side. So when you buy, that would really help you. But if you have more than $25,000, it would help you when you sell, because you can maximize profit with less risk. So the less you'll be having less shares as it goes up. So the average would be $22 instead of all putting it at 24. So would you really risk $2 for not selling at all? That's one of the best parts about it. So now it's about to sell. I did it kind of fast, so I kind of have to move it. Since I usually take like 20 to 30 minutes on each trade. Okay, now you can see it's kind of failing, so I'm just going to do a market sell for 2. So see, I still made $10 and we're good. But since DWT is going down, UWT is going up. So that means I can buy the ask. I have all these orders. I'm just going to do it one more time. So if we just go 1, 1, 2, 2, 3, 2, 3, 4. All right, and then as it gets lower, as it tanks a little bit, as you can see, this is being a really, really consistent day here. But you can see it's already done $2, and if it pretends to drop back, so if I just put it up here, if I move it up with the shares, which I would not recommend doing. I'd recommend if it's going down, I'd do this, but man, this stock is acting really, really clean today. So the sellers are winning, so I'm going to push it down just a little bit. So 1, 2. So I'm still making money, and then if the stock price accidentally tanks, I can just cut out. So that's where my goal is, because it's at the top of the trend line, the VWAP, and if it ever hits down, we can manage that risk later, but it's all about managing risk, and this is how I manage risk. And I just think it's a pretty good thing. So it's kind of like doubling down, but I don't think it's doubling down because I'm going to sell it at the lowest price. So if it's going down and the stock is tanking, you want to make a ladder. So then it'll move your average price down per share, and then it'll move up your profit. So if you're down $70 and then you do this up to 6, so it'd be 200 shares, 300 shares, 400 shares, 500 shares, 600 shares. So it just moved it down. So now I'm only down $1.71, but I was down $17 before. And that's only in the first part of the ladder. So if it all of a sudden dropped down here, it'd move my entire moving average. It's doing it right now. I'm still managing risk. 590, 590, 590. Still managing. It stayed that way even though it dropped 5 cents. So look, I got it down to $8. I bought it at okay, boom. I mean, it still went up, but for how many shares I have, it's so now that went down, so I can have 1,000, and then if I just do 100, shoot, 100, and then a 1. Alright, so I closed it out. I only took a $20 loss on a downhill slope that spanned 1.4%, but I had over 3,000 shares. Now that is frickin' pretty good. So what you guys need to think about it as like levels. So as the ball drops from the top of the building through all the levels, it's slowing its average pace down. So at the very end, it's moving your average price down. So you can see the buyers are winning right here. I'm just going to put in a 1,000 market share. But as it goes down, it breaks all these levels and slows down. Or like an parachute or an airbag or anything. It comforts you and it slows you down to a stop, but it slows you down slower. Like if you're in a car and the car crashes, the airbag, if you don't have an airbag, it's an instant stop head on your steering wheel, and that really hurts. So what they do is explode a squishy bit so your head can have more time to slow down as it compresses, or like a spring. But yeah, thanks for watching.